South African residents who make money from overseas employment could now be taxed domestically on their earnings. National Treasury has proposed amendments to laws that will allow it to tax citizens who work overseas and enjoy better tax rates. Currently, if a resident works abroad for more than 183 days a year and passes certain income thresholds, he does not have to pay tax on foreign-based income. The changes that are to take effect from the 1st of March 2019 will scrap this tax exemption.
When you deal with employment income, the basic principle is that your source of that income is where you physically perform the work that is being subject to tax. So typically, if I were to, let's say, be in the UK for a year or two, while I'm working there, the basic principle is that the UK has the opportunity to tax me. And South Africa, where effectively my place of residence is, which has a right on worldwide tax, would provide an exemption and thereby avoiding double taxation. Now, the changes is to say we take away the exemption, and because the first proposal was made during the budget was to say we'll only give you the exemption if you can prove that you've been paid or you're paying tax in that other jurisdiction.
The proposed changes will bring an end to double non-taxation. The exemptions were initially introduced to ease the tax burden on employees, but Treasury faced situations where no income tax was paid either in South Africa or in the foreign country. Removing the exemption would mean that tax would be paid on worldwide income in South Africa. But tax credits will be recognized for any foreign taxes paid, so there's no double tax. The new tax proposal is open for public comments until August the 18th, 2017. Pending any amendments, the changes should come into effect from the 1st of March 2019.
A lot of the African countries depend on the double taxation treaties that we have in creating that authority as to who has right to tax. Some of those countries are not on a pure worldwide tax system as we are. They're still very source-based, as our old system would have been. And also the amount of people who work in Africa and then going to other jurisdictions is less. I would say South Africa is probably more dominant in that market than some of our neighbors. And also the authority in that country, that tax authority, might not yet be at that complexity or at the ability to collect or to understand those taxes, to assess it properly. You know, South Africa's tax system is very evolved and a lot more complicated and able to get this information to tax it.